na na hey, da na 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 hey, da na 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 hey, light it up like dynamite. Da na 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 hey, da na 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 hey, da na 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 hey, light it up like dynamite. 'Cause I'm in stars tonight. So watch me bring the fire, set the night alight. Shining through the city with a little fucking soul. So I'ma light it up like dynamite. This is so watch me bring the fire, set the night alight. Shining through the city with a little fucking soul. So I'ma light it up like dynamite.
Okay, good afternoon, everyone. Thank you for attending this webinar. I'm honored and super excited to have you this afternoon. Dear Deputy Dean Faculty of Accountancy, Finance, and Business, Tunku Abdul Rahman University College, Malaysia, Dr. Chin Mui Yin, dear Head of Accounting Program of Faculty Economic and Business of Atma Jaya Catholic University, Indonesia, Dr. Petrus Ridayanto, CPA, dear Deputy Dean and Principal Lecturer of Tunku Abdul Rahman University College, Malaysia, and also our webinar speaker, Mr. Koh Kim Siang, FCCA, MSc, DipComm. Dear colleagues, friends, and students, welcome to webinar, The Impact of COVID-19 on Financial Reporting. My name is Linda Kusumaning Wedari, and I will be the moderator of this webinar. This COVID-19, the Dean Faculty of Accountancy, Finance, and Business to Abdul Rahman University College, Malaysia, to present her opening speech. Please, Dr. Chin.
Okay, thank you, Miss Linda, and good afternoon to everyone. So it is indeed a great pleasure for us to have another round of webinar. In fact, TARUC and Ahmad Jaya has a very good relationship. We visited Ahmad Jaya last year, and so to Ahmad Jaya also sent a staff to visit TARUC last year. And in fact, this year we also would like to pay a visit to Ahmad Jaya, but because of the COVID-19, we delay it and we do it virtually. All right, and we really are happy to have a different series of webinar for different types of topics. And this is not the first one. And I still hope that the students can get different types of knowledge from what the speakers will be delivered later. All right, and we also look forward to have more collaborations with Ahmad Jaya, such as staff or students exchange, dual award programs, and so on and so forth, so that Malaysia and Indonesia will have a better collaboration in terms of academic, in terms of research, and other aspects as well. And last but not least, I hope that all the participants from this webinar can have a fruitful and more knowledge after listening to the speech from our lecturer, Mr. Koh, who is also our Deputy Dean. So before I end my speech, I wish everyone to have a fruitful knowledge later after the end of this session. Okay, sekian, terima kasih. Thank you.
Thank you for your opening speech, Dr. Chin. This webinar will last approximately 2 hours from 1 p.m. to 3 p.m. Jakarta local time. since the Zoom capacity is full, so maybe hundreds of you are attending this webinar by the live streaming on YouTube. And today webinar, we have Mr. Koh Kim Siang, FCCA, MSc, DipComm. Mr. Koh is the Deputy Dean and Principal Lecturer of Tunku Abdul Rahman University College, Malaysia. He oversees the Akuntansi and Finance programs in Tunku Abdul Rahman College, University College, sorry. He also teaches financial reporting related courses up to the master degree level. Mr. Koh had many industry experiences, included audit and the financial reported in public accounting firms and companies or conglomerates. Involved in manufacturing and trading of building material, retail, motorcycle assembly, internet surveillance, carpet manufacturing, and marketing. Question and answer session will be open after the presentation, so Mr. Koh won't be distracted by any question or interruption. So please put any your question in the chat room. Then I will read it out to Mr. Koh to be answered. And please don't be hesitate to write it, your question in Bahasa, and I will translate it for you. Okay. So I can feel your enthusiasm of listening, Mr. Koh. Mr. Koh's presentation. So let's begin this webinar. I will pass the session to Mr. Koh. You have 45 minutes for the presentation, Mr. Koh.
Yeah, okay.
So please, Mr. Koh.
All right, thank you, Linda.
Pleasure.
Can you all see the slides?
Yes, I can see it.
Yeah, okay.
Thank
Okay,
you.
let's maybe, hello everybody. Okay, this talk, which is on the effect of COVID-19 on financial reporting, okay? First thing first, we look at what is the situation, okay, of this COVID-19 outbreak. It's as of the 23rd August, okay, this was about a month ago, okay, there was about 23.05 million confirmed cases of COVID-19 infection, okay, and as at that date, there were about 800,000 deaths from the COVID-19 infections. And then the first case was reported to WHO on 31st December 2019, okay, and to date, I think at least 188 countries worldwide, okay, have been infected with this COVID-19 virus, okay. So that is the extent of the so-called outbreak and the extent of the effect that COVID-19 is going to have on the world, okay. Then what are the actions? You see, what is the effect of this COVID-19 outbreak? Okay, arising from these, there are a lot of so-called actions taken by governments throughout the world, okay, basically to control and to so-called prevent the spread of this virus, okay. The main thing will be like things like lockdowns are being imposed by government. By lockdowns, it means there will be restriction on the movement of people and the carrying on of economic activities, okay. At the height of the lockdown, I think practically people movement are restricted. People are expected, forced to stay at home. They can't leave their house, okay? And factories, companies cannot function, cannot open for business because employees cannot go to work, okay? So as the thing progresses, of course, there are some complete or partial lockdown. Again, then the lockdowns are being relaxed progressively until today. I think a lot of countries would have already relaxed the so-called the lockdown restriction. Okay. Then what is the other action is that arising from this COVID-19 is that there will be redeployment of resources because they see because of the damage. okay, because of the fear of infection. Okay, right now everybody is trying to redeploy resources have been channeled towards the prevention as well as to finding the cure, finding the vaccine for this COVID-19. Okay, of course, then government are also introducing a lot of stimulus packages, assistance packages, financial assistance packages to help basically the individual citizens as well as so-called businesses, okay, basically to help them to survive this COVID-19 outbreak, because the extent of the effect, the damage is really very widespread. The only thing, the only difference here is that because of this COVID-19 pandemic, you see, as far as financial reporting is concerned, there is no so-called serious problem with the existing so-called practices of financial reporting. It's not like those cases where we have some very major financial scandal, where it is called affect certain countries or certain region. Because when financial scandals happen, it is basically most often because of failure of the existing so-called accounting profession or the financial reporting standards to so-called to cater to the reporting needs. But in this case of COVID-19, there is nothing wrong with the so-called reporting practices. It's just that we have to be more careful and look at those new abnormal so-called practices, measures that have been implemented to counter this COVID-19 and see how we should so-called report them into the financial statement. Okay. At the end of the day, you see, financial reporting, the objectives is basically to provide useful information. Okay. You see, when it comes to the effect of COVID-19, you see, when the government impose or so-called implement certain control measures, either to prevent or to find a cure, what are the main effects? Okay. First thing first is that when there's a lockdown, drastic drop in customer demands because customer cannot go out, they can't go out to buy things, they cannot go out and eat. Okay, demand for goods and food will be affected. There will be disruption of production of supply chain. Okay, because if workers cannot go to work, production facilities, production will have to be stopped or reduced. Likewise, because of the need to keep social distancing or physical distancing, okay, the number of workers in the factory or in the office has to be limited. Okay, so that will affect the production capacity of manufacturing facilities. Likewise, if sales drop, inventory levels will definitely increase, because if you're producing, you have been producing that much, then suddenly that the demand for those goods are much less, your inventory levels will drop. So when inventory levels increases, so the inventory will be subject to higher risks of so-called obsolescence, okay, or even from damage. Okay, then of course there will be a risk, more risks of recognition of significant impairment losses. You see, when we talk about impairment losses, means, you see, when a machine who is supposed to be able to earn you, let's say 10 million, suddenly because of this pandemic, okay, its earning ability is reduced, is affected adversely. So now it can only earn you, let's say 8 million. Okay? Financial reporting standards will require you to recognize the impairment losses. Okay, so if previously you recognize you are carrying the asset in your books, in your financial statement at 10 million, now you may be only allowed to carry the asset in your financial statement at 8 million. So the 2 million difference you will have to recognize into your profit or loss. Again, that is going to hit you in terms of your profitability very badly. Okay, so that is one of the very significant impact, okay, from the COVID-19. Then of course, the stock market decline will lead to sharp decline in market prices, okay, of shares. There will be increase of default by customers, because if you have been selling to your customers on credit, okay, under normal certain situations, they will be able to repay you on due date. But with this COVID-19, okay, many companies may find themselves difficult to survive, hard to survive, and also hard to find the cash flow to pay you. Okay, if they drag the payment to you, as time goes by, the longer they delay, the higher the risk of default, and the higher the possibility that the debt will become a bad debt. Okay, then of course, arising from this difficult economic environment, companies will start taking drastic cost-cutting measures. When cost-cutting measures come into play, then demands for everything will be down. Economic activity may also be down. Okay, then in the worst, more badly affected industry, there will be redundancy, laying off of employees, workers. Why? Because demands for their goods are now no longer that high. Okay, maybe it's only 50 or 60% of the previous level. They don't need to produce so much quantity, and they will have excess workers. Then they will have to lay off excess workers, and there will be redundancy. Okay. Then of course, the impact on profitability and cash flow will also result in companies facing increased risks of loan default. Like banks, they may face increased risk of loan defaults by company. Let's say if the company could not generate the normal cash flow, could not sustain the normal level of profitability, then they will be in trouble. They will not be able to service the loan. Okay, so there's higher risks of loan defaults by customers, and likewise, there will also be higher risks of violation of so-called loan covenants imposed by bank as far as the bank borrowings are concerned. Okay, then of course, in terms of the business operations, okay, of companies, there may be a need for restructuring. Certain line of business may have to be so-called reduced, and maybe to rechannel resources to other so-called business operation, which is more so-called productive in terms of generating of cash flow and profitability and revenue in these times of COVID-19. Okay. You see, having considered those initial implications of the COVID-19, okay, the effect of lockdowns, all those things, you see, then we look at, okay, what is the problem with this COVID-19 pandemic on financial reporting? Okay, see, like I mentioned just now, it is not now it's not a problem of so-called deficiency or shortcoming in the financial reporting practices. The financial reporting standards, the requirements are still there, are still adequate. Okay, it is a matter of how you have to present your so-called financial statement in a so-called relevant way and a faithfully representative manner to take into account all so-called abnormal events, abnormal so-called practices or transactions arising from this COVID-19 pandemic. Okay, so you see, because you see, at the end of the day, financial reporting, the basic primary objective, okay, is basically to provide financial information that is useful about the reporting entity. Okay, useful for whom? Useful for those existing potential investors, lenders, and even other creditors, for them to consider whether or not they should lend you money, provide resources to your entity. In the case of investors, whether to invest in your shares, to provide you with the capital to run your operations. For lenders, whether or not to decide whether to lend you money, okay, for you to fund your operations. Other creditors, like suppliers, whether or not they would not want to continue to supply you on cash or credit or 30 days or 60 days. Okay, so this is the purpose of financial statements, providing those useful information to all these parties. Okay, so you see, at the end, when it comes to financial reporting, there are always three basic problems. Okay, all these problems, if you look at it, whatever the problem is, it has to do with measurement, recognition, and transparency of disclosure. See, when it comes to measurement, you see, in financial reporting, we can only report or present things that we can measure. Okay? Things that we can measure means we can have a value attached to that thing, that transaction. Okay? So the measurement problem here has to do with whether and how items of asset, liability, income, or expenses could be measured, okay, reliably and presented faithfully in the financial statement. How to measure, okay? The other one is recognition. Recognition has to do when you book in the transaction, the item, whether it is to be an asset, liability, income, or expenses, whether or not you can or you are allowed to recognize it into your financial statement. Okay, then there is a disclosure problem. Whether certain information should you or should you not disclose in the notes to your financial statement, basically to provide more understanding of the figures that you present in your financial statement. Okay, you see, you look at COVID-19. COVID-19 is going to present problems, okay, affect measurement, recognition, as well as disclosure. Because it is an abnormal, extraordinary so-called event, okay? So it's a matter of how much information you want to disclose, how much it is affecting your recognition of your revenue, how much is it affecting your measurement of your assets and liabilities, okay? Okay, then in this talk, I'm going to touch on a few, okay, implications of this COVID-19 outbreak, which I will consider as a major consideration. The first thing is going concern implication, okay? Then next is the material impairment losses arising from this COVID-19. Then special government grants that are introduced by governments around the world to help businesses and also even to help individuals, okay, to battle this COVID-19 storm. Likewise, there will also be special income tax incentives or scheme, okay, introduced by government aimed at so-called lightening the tax burden of companies. Okay, then of course there will also be variations in leases. Okay, because it will be the COVID-19 will affect business operations. Okay, then insurance claim maybe related to COVID-19 losses. Okay, then of course the next thing is revenue recognition. The COVID-19 pandemic is going to seriously affect how much revenue can an entity recognize. Okay. Okay, first we look at the going concern implication. Okay, when we talk about the going concern, okay, as accounting student will know, all financial statements, okay, are normally prepared on a going concern basis. Going concern basis, that means it is prepared on the assumption that the business, okay, business operations of the entity is expected to continue, okay, to operate for the foreseeable future. Normally, the foreseeable future here, we will estimate it. It is not defined. Okay, we will interpret it to mean at least 12 to, let's say, 1 year to two or 3 years. Okay, but you see, if you look at this requirement in light of this COVID-19 situation, okay, for you to estimate what is going to happen in the next 12 months may also be difficult. Okay, whatsoever you want to project or forecast, how are you going to survive in the next 12 to 24 months? Okay, you see, the IAS 21 presentation of financial statement requires all entity, okay, to assess, okay, whether the entity has the ability to continue as a going concern for the next at least 12 months. Okay, and because financial statements are prepared on the going concern assumption, then the entity has to consider whether the use of the going concern assumption is still appropriate, is still relevant. Okay, of course, when you look at all this, when you assess such this consideration, the entity is expected to take into account all available information, not just up to the financial year end date, but also beyond until the date when the financial statements are expected, so-called authorized for issue, which is, that means the entity will have to take into account some events of that are after the reporting period. Okay. Okay, then you see, when it comes to going concern, the ability to remain as a going concern very much depends on an entity's liquidity and the ability to generate healthy future cash flow. Okay. In arriving at whether the going concern assumption is still valid or appropriate, okay, then we have to look at to consider whether the entity is still able to generate so-called positive cash flow from its principal revenue generating activity. That means from its main activities. Okay, of course, if it's in a business, then its main business activity should be able to generate positive cash flow. You see, cash flow is important. Okay, and then we also have to look at the cash flow generated. Is it sufficient for the entity to pay, okay, its contractual obligation as and when they fall due? Okay, then in the case in the course of projecting or forecasting, okay, the company's ability to generate future cash flow to meet the future short-term contractual obligations, okay, the company, the entity is expected to look at all material uncertainties, whether all material uncertainties have to be taken into account. Because any projection, okay, forecasting into at least 12 to 24 months, there will be a lot of uncertainty involved, especially in this period of COVID-19. Okay, where even next 12 months, you do not know where you are or what is going to happen. Because you do not know how the COVID-19 outbreak is going to so-called to become, whether it's better, improving, or it's going to get worse. Okay, because we see that initial period where the COVID-19 has been so-called very serious, where a lot of countries are imposing lockdown. Then subsequently they relax all the lockdown restriction, and after that, okay, the number of infections came back, increasing. Okay, so this is a major concern, okay, for everybody, for all reporting entities, because you do not know how the COVID-19 outbreak is going to so-called become, whether it's going to improve, or it's going to be maintained, or it is going to get worse. Okay. You see, why going concern is always one of the major concern, especially in this so-called period of COVID-19 outbreak. Okay, because you see, if the company cannot generate the revenue, the cash flow, and the profitability that is enough for it to survive, okay, the company will end up unable to settle loan repayments. Okay, then the company may even violate certain loan covenant, that means loan condition, terms and conditions that are imposed by bank when they lend you the money. That means it's like they may say, okay, your gearing level must not exceed, let's say, 30%. So if without COVID-19, your gearing is anytime below 20, but because of COVID-19, you have to borrow more because of a lack of cash flow, then your gearing may exceed the 30% threshold set by the bank. You see, one possible implication of violation of loan covenant is that the bank may decide to recall the loan extended to you fully. And if you can't repay, then you are going to be in trouble. The bank may take over your operations. Okay. Then, of course, arising from COVID-19, there will be severe curtailment of business operation, business activities. Your sales volume, your sales production will be down. Okay. Then business operations badly affected. Okay, there will be some, even for 6 months, where may end up so-called 6 months with no revenue at all. And these businesses, okay, they can't even foresee whether for the next 6 months or 12 months, they are able to recover, okay, and continue to survive as a going concern. So this is, I believe in every country, even back in your country and even like in Malaysia, we have already read in the papers, there are many companies. Okay, so far what they have is mostly we have a few hotels, okay, that has already ended up winding up their operations because of the lockdowns. Hotel occupancy rates are down. Okay, they can't survive. Okay, then of course without any revenue, okay, entities will not be able to generate healthy cash flow, sufficient cash flow, okay, to sustain their operations. You need cash. Okay, remember cash is the lifeblood of all businesses. You may be reporting losses, but if you have a lot of cash, because you deal everything in cash, then you can survive longer than a company that is reporting profit but have no cash. A company can be reporting profit but no cash because the profit is kept or locked in stocks, locked in the receivables, not represented by cash. Okay? Then of course, when it comes to disclosure, okay, arising from the COVID-19, then the company is expected to disclose if there's any material uncertainty surrounding the entity, surrounding the operations, which may cast what we call significant doubt, okay, on the entity's ability to continue as a going concern. Okay, when that happens, then the financial statement of the entity should not be prepared on a going concern anymore. Okay, the moment the financial statements are not prepared on a going concern basis, the assets value reported in the financial statement will be much less. Okay, then of course, if you have used some significant assumptions, okay, in your revenue and so-called cash flow projection, you have to state that, because any assumptions used in the projections, okay, needs to be assessed. Okay, because auditors will look at your projection, whether they are reasonable or not. They look at your assumptions. Whether your assumptions in light of, let's say, COVID-19 outbreak, are they reasonable? Are they realistic? Okay, I mean, you can use unrealistic, bullish assumptions in your projection so that you project a very rosy future for your company. But is that realistic? Okay. Then we look at the situation where COVID-19 may result in significant or substantial impairment losses. So what is impairment losses? You see, as an accounting student, when you look at a company's statement of financial position, see, every item of asset, let's say we look at one item, plant and machinery. If you carry the plant and machinery in your statement of financial position, okay, at let's say 10 million, what does that 10 million mean is that you are telling the reader the plant and machinery, if you continue to use that asset, can generate for you, okay, in terms of present value, 10 million worth of cash flow. Okay, so you see, if you look at the statement of financial position, every figure, single figure there tells you that. Okay, so accounting practices, accounting standards says that if the moment a particular asset, okay, is unable to generate the cash flow, okay, that it is originally expected to generate, okay, you will have to recognize an impairment loss. Let's say if you carry the value of the asset in your financial statement at 10 million, then when you do an impairment review, you find that even you use the asset until it's at the end of the useful life, it can only generate maybe 8 million cash flow for you as a result of this COVID-19 pandemic. So you see, you are not allowed to carry that asset at 10 million in your books. You have to mark it down. You have to recognize an impairment loss of 2 million, okay, impair the 10 million asset down to 8 million and present it in your financial statement at 8 million. So that is the effect. So this is going to be a very serious implication for a lot of companies in light of this COVID-19, because COVID-19 is going to affect the ability of a lot of assets to generate the originally expected cash flow for the company. Because demands of the products produced by the assets is going to be affected. Okay, it's unlikely that you can recover, okay, that much of cash flow from the assets, from the use of the assets anymore. Okay, so this is the problem of IAS 36 impairment of assets, where COVID-19 can result in a lot of significant impairment losses recognized by so-called reporting entities. Okay, so this is impairment losses. Because impairment losses, you look at the carrying amount, Then we look at the recoverable amount. Recoverable amount is the amount that you can recover from using the asset or from selling off the asset. Okay, when that figure, the so-called the recoverable figure, is less than the carrying amount, you have an impairment. You have to recognize the impairment loss and adjust the value of the asset down to the recoverable figure. Okay, so this is going to be a very serious implication, and it's likely to affect a lot of companies. Okay. Okay, why COVID-19 is going to cause increasing levels of impairment? Why? Because of lockdowns, there will be production facilities that have been shut down. They cannot produce the normal level of quantities production. Okay, why? Because workers cannot come back to work in full. Okay, or the demand for the products produced by the plant is no longer that high, so it doesn't need to produce so much, such a big quantity. Okay, then there will be sharp demand, decline in demand and the selling price. When your sales volume is down, your demand for your goods is down, it's likely that you may want to drop your selling price to encourage more quantities to be purchased. Okay, then of course, let's say in the case of market interest rate, okay, so far what we see is that as a result of COVID-19, okay, it's more of a case of interest rates are being reduced by central banks. Okay, partly to help to alleviate or lighten the burden of businesses. Okay, it's not so much of an increase, it's more of a reduction in the market interest rate. Okay, then of course, arising from the COVID-19, there will be significant adverse changes, okay, in the market or economic environment in which the entity operates. Okay, of course, different industries are affected to different degrees by the COVID-19. Say like tourism industry is considered the worst hit. Likewise, food and beverages may be affected quite significantly as well. Okay, but in cases where companies are involved in the production of, let's say, gloves, facial masks, which are going to be very much in demand during this period of COVID-19 pandemic, then they will be the beneficiary of this COVID-19 outbreak. Okay, their revenue, their profitability, their cash flow is going to be increased significantly because their products will be in demand. Okay, so it all depends on the industry. Okay, each different industries will be affected, okay, in a different way, in different degree by this COVID-19. Then of course, when it comes to disclosure, okay, in light of this uncertainty, because you see, if arising from COVID-19, even the next 12 months is very difficult for you to see what is there for you in the next 12 months, whatsoever anything beyond 12 months. Okay, so there will be a lot of significant uncertainty and volatility associated with the COVID-19 outbreak. Okay, there will be disclosure, detailed disclosure of assumptions made. Okay, evidence to support assumptions used. Let's say even in your impairment review, what are the assumptions? Because you're good in impairment review, you have to forecast the future cash flow that you can generate from using the asset concern. So that forecast itself is subject to a lot of assumptions, a lot of judgment involved, okay, a lot of so-called uncertainty. So you have to disclose detailed assumptions that are being used by you in your forecast, in your so-called projections. Okay. Likewise, you may have to so-called provide evidence, okay, to substantiate those assumptions that you use in your projection. Because otherwise, everybody can just use any so-called bullish assumption because they want to have very good results, good cash flow projection. Okay, but are they realistic? Okay, are they reflective of the industry that the company is operating in? Okay, of course, then the key assumption that you use in your projection, what is the impact if there's any change? Okay, then you may have to show a sensitivity analysis. Is there any 10% change in the assumption? What is going to be to be the effect on your cash flow projections. Okay, so these are the things that you have to consider. Okay, then we have to look at other things like special government grants or government assistances that are being so-called introduced by government. Okay, in light of especially for this during this COVID-19 outbreak. Okay, you see, IAS 20, a government grant is basically a transfer of resources, okay, to an entity. Okay, basically normally in return for some past or future, okay, compliance with certain conditions relating to the operating activities of the entity. Okay, see, under IAS 20, okay, accounting for government grants and disclosure for government assistance, government grant can only be recognized as an asset, okay, when there is reasonable assurance that the entity is able to comply with the terms of the government grant, okay, and the grant will be received. Only then you are allowed to recognize a government grant. Of course, in most cases, if you have already received the cash, okay, from the grant, then basically that is already conclusive evidence. Then you can recognize the grant. But it is something that indicated that the government intend to give you a grant. Okay, you can only recognize or accrue the grant into your financial statement only if you are fairly assured, okay, that whatever terms and conditions that comes with the grant, you can satisfy them, okay, and the grant will be received from the government. If there's no such assurance, okay, then you are not allowed to recognize it, even though there may be a notification from the government that you will qualify for a loan if you meet certain so-called conditions or criteria. Okay. Say if there are some form of subsidies, okay, that are given or so-called are provided by the government, okay, to help businesses, okay, to battle, to so-called fight the COVID-19 outbreak, okay, then such subsidies should be accounted for as like a normal government grant according to IAS 20. Okay, of course, if you have grants received relating to expenses or losses incurred as a result of the COVID-19 outbreak, then maybe like you incur a lot of so-called expenditure towards the prevention, okay, or so-called implementing safety measures in your company, then the government may say, okay, I will give you a grant or a subsidy, a certain amount, basically to subsidize your expenditure, those abnormal expenditure to battle, okay, to fight the COVID-19 infection. Okay, so in that case, if these type of grants are received, so long as it's assured and you can meet the condition, okay, then you should be recognized. You are allowed to recognize it as an income for the year. Okay, when they become receivable, that means you are allowed to accrue it. Okay, on the condition that you can meet the conditions. Okay, and the grant is to be received from the government. Okay, then you see government may give reform, so-called reliefs in the form of income tax reduction. Okay, if it is reduction of income tax, okay, then it should be accounted for under IAS 12 income taxes. Okay, and let's say if there are any rental reductions, okay, or deferral, this should be recognized under IFRS 16 governing leases. Okay, it can be leases granted by government or from private so-called landlords. Okay. Okay, then government may also offer, okay, provide special low interest loans. Okay, then this one is more to reduce the cost, okay, for businesses to take loans to fund their operations during the challenging period of COVID-19. Okay, if it is special low interest loan, then fine, these loans should be measured at fair value, okay, in accordance with IFRS 9 instrument. Okay, so you see, if there is the difference between the initial fair value of the loan and the cash proceeds received, okay, by virtue of a low or whatever, the difference between the fair value of the loan and the initial cash proceeds should be recognized as a government grant. Okay, so this will be relating to government grant. Okay, and there may be certain cases where government may offer so-called special forgivable loans. Okay, for companies to battle the COVID-19 outbreak. Okay, what are forgivable loans? Forgivable loans are loans that may be so-called forgiven. Forgiven once the loan is forgiven. Okay, once the loan is forgiven, then the loans you don't need to repay to the government. Otherwise, you have to repay. It's still a loan. Okay, but the loans will become forgiven only when certain conditions are met. Okay, under certain prescribed conditions under the terms of the loan. Okay, so until the time when the loan becomes forgiven loan, okay, such loans should still be accounted for, okay, under IFRS 9 as a financial liability. Let's say if subsequently, if certain conditions are met and the loans are forgiven, that means you don't have to repay the loan, then it should be accounted for as a government grant. It becomes a grant, no longer a loan, because you don't have to repay the government. Okay? Then when it comes to disclosure requirement, okay, then when it comes to special government incentives, grants, or assistance during this period of COVID-19, then you have to disclose the nature and extent of this special government grant, okay, in light of the COVID-19 outbreak, because you have to say so that these are received, okay, because of COVID-19 only. Once COVID-19 outbreak is no longer there or already under control, then you will no longer receive such so-called assistance or grants from the government. Okay, then if for any other grants, or let's say for forgivable loans or things like that, if there are any for unfulfilled conditions, because all grants, all so-called forgivable loans or whatever, okay, will come with certain conditions that you have to meet. If you meet them, yes, then it becomes you are entitled to the government grant, or it becomes that you do not need to repay the loan. Okay, so as long as you still have some unfulfilled conditions under the terms of the contract, either for the government grant or for the so-called forgivable loans, you have to disclose. Because why? You have to disclose so that you let the reader of your financial statement know some of these conditions. If it is not met eventually, you may be required to repay the grant, okay, a proportionate amount, or even to repay the forgivable loan. Okay, so that's where you need to provide information as accurate as possible, okay, to let the reader know what are the potential losses or gains that you may experience in the event of certain so-called future event. Okay. Next, then you may have a special income tax incentive or scheme that are introduced, okay, or implemented by the government, okay, as a way to reduce the burden or lessen the burden, okay, the tax liability burden of companies. Okay, so IAS 12 income taxes says current tax liabilities and assets, okay, for the current or prior period should be measured at the amount expected to be paid based on the tax rates, the latest tax rate that is known. Okay, then when you look at economic stimulus packages, okay, introduced by government in light of the COVID-19 in the form of tax concessions or tax rebate, okay, may come in the form of tax credit or reduction in so-called tax rates. Let's say when it comes to tax credit, if the tax credit is structured, okay, in a way, okay, the intention is to reduce an entity's tax liability, then the tax credit should be accounted for under IAS 12 income taxes. Okay, but if the tax credit is structured as a cash payment, okay, or have similar characteristic as a government grant, okay, with non-tax related conditions. That means the conditions for entitling, qualifying for the grant do not have any tax related conditions. Then the tax credit should be accounted for as a government grant under IAS 20. Okay. Then when it comes to cases where there's a reduction in the tax rate, then fine, tax concession, okay, in the form of reduction in the tax rates would normally require an entity to ensure that the changes in the tax rates and laws have been enacted. That means it's quite firm. Already enacted here can mean passed by the parliament. Okay, that means already become effective law. Okay. Next will be carry forward of tax losses. This will be a problem which may be quite so-called significantly affected by COVID-19. You see, carry forward of tax losses. We all know tax losses is a benefit. Benefit in the sense that tax losses approved by the income tax authorities may be used to offset against future business profit of the company, okay, so as to reduce the company's tax liability. Okay, you see, in accounting, okay, when it comes to IAS 12 income taxes, for tax losses to be carried forward, normally if you are expected to generate enough future profits to utilize these tax losses, then it becomes a benefit. A benefit that we have to recognize, we are allowed to recognize a deferred tax asset. Okay, that means recognize it now as a deferred tax asset, then the asset will so-called materialize in some future period. Okay, so you see, accounting standard says that you are only allowed to recognize a deferred tax asset if you can show that you have the ability to generate future profits, and this future profits is sufficient for you to make so-called enjoy the full benefits of these tax losses. Okay? If you have 10 million of tax losses, then you are able to, your future profitability can be, let's say, 20, 30 million, then fine, no issue. Your 20, 30 profitability can be used to offset against the so-called tax losses of 10 million, okay, to reduce your overall tax liability. But if your tax losses carry forward, let's say it's 10 million, but whatever you do, however you calculate it, the amount of future profits available that your company can generate, let's say it's only 2 million. This 2 million will not be able to maximize the benefit from the tax loss of 10 million. At best, you can only so-called enjoy the benefits from the tax losses of up to 2 million. Then whereas the other remaining 8 million tax losses, you cannot recognize a deferred tax asset. Okay, that is the implication when it comes to carry forward of tax losses. Okay, you must have enough future profits to utilize the tax losses, okay, to maximize your benefit from those tax losses. Otherwise, your tax losses, the benefit is only partial or may not exist. In which case, then you are not allowed to recognize the deferred tax asset. Okay, so you see, the COVID-19 pandemic may result in a loss of tax benefits from tax losses carried forward, okay, as a result of a lack of future profits. Then when it comes to disclosure, okay, relating to special income tax incentive or scheme, okay, then you will have to explain the changes in the applicable tax rates compared to the previous period, okay, and then also you may have to disclose the nature of evidence, okay, supporting the recognition of deferred tax asset in light of a deterioration in the economic outlook due to the COVID-19 pandemic. Okay. because COVID-19 is definitely affecting many companies' future profitability and also ability to generate future cash flow. Then next, we look at variation in leases. Okay, so IFRS 16 leases defines a so-called a lease modification. Okay, when there's any modification or changes in the lease arrangement or lease contract, okay, such lease modification, IFRS 16 says, if you want to call it a lease modification, it has to be a change. It has to involve a change in the scope of the lease, okay, and then also a change in the consideration, how much you pay under the lease, okay, and the scope of the lease as well as the change in the consideration, these are not part of the original terms and conditions of the lease contract or lease arrangement. Okay, so let's say when landlords or lessors grant you rent concessions.
Sorry, Mr. Kim.
Yep.
Already over the time, so I would be happy to give you more time if you.
Yeah, maybe say about another 5 minutes will do.
Okay, 5 minutes is okay.
Yeah. Okay. So rent concession may be so-called accounted for depending on whether it is a so-called a modification. Okay, so you have to recognize this according to IFRS 16 leases. So it's not a problem. Okay, so you have to account for changes to the leases by the landlord or by the lessors according to the provisions of IFRS 16. Okay, then the next thing is, let's say in the case of lease arrangement, because you may have to discount the lease payment, the future lease payment to present day, okay, to determine the lease liability, to recognize the lease liability in your financial statement. So the COVID-19 situation is going to affect the discount rate, because most likely there's going to be a reduction in the interest rate, so the discount rate will be affected. Okay. Okay. Then next will be insurance claim relating to COVID-19 related, matters, issues. Okay. So the IAS 37 says that you can only recognize such claim, okay, if it is virtually certain that you are going to receive such compensation under the claim. Okay, you may incur some loss, and under the insurance company insurance policy, you are able to claim some compensation for that losses incurred due to COVID-19 under the policy. Then you can only recognize the income, okay, if you are virtually certain that the compensation can be received. Okay. Then of course the insurance reimbursement amount has to be treated as a separate asset. You cannot offset the insurance reimbursement amount against the so-called the COVID-19 loss. Then when it comes to contingent assets, only when the contingent asset has become virtually certain that there will be an outflow or inflow of economic benefits, then you are allowed to recognize that asset in the financial statement. Otherwise, you are not allowed to recognize such contingent assets. Okay. Again, the virtually certain condition, okay, may be difficult to meet in light of the COVID-19 situation where a lot of uncertainties are involved. Okay. Then, last but not least, one of the most important impact of COVID-19 is revenue recognition. Okay, COVID-19 is going to affect a company's ability to satisfy its performance obligation under IFRS 15. Okay, if you cannot satisfy your performance obligation, you are not allowed to recognize any revenue. Okay, or it may affect the pace, how fast you can recognize, satisfy your performance obligation, and thereby it affects how soon you can recognize the revenue. Okay, because the COVID-19 outbreak will affect an entity's ability to satisfy the performance obligation. Okay, and then may also seriously affect a customer ability to accept delivery of the goods that he has ordered. Okay, so you look at it, COVID-19 will definitely seriously materially affect the ability of most businesses to generate revenue. Once revenue generating capability is seriously impaired, an entity's survival will be in serious doubt. Okay, so that's all for my talk. Thank you.
Thank you, Mr. Ko.
Yeah.
Thank you, Mr. Ko, for your very inspiring presentation. So I will summarize the presentation that COVID-19 pandemic has impacted our life and businesses. Both government, Indonesia and Malaysia, have given some grant scheme or financial support packages for businesses to keep the businesses in the business, and also to leverage our economy. Businesses receive huge pressure to adjust promptly, and so do accountants. We are as accountants, and some of you, the future accountants, are facing big challenges in understanding the new business model and recording the changes in financial reporting accordingly. I also noted that Mr. Ko in his presentation has explained us about mainly about 5 financial reporting issues to be considered as consequences of this COVID-19 pandemic. So those are going concern and liquidity, impairment assessment, contract modification, fair value measurement, and also government assistance and income tax.
Yeah.
So I know today's topic may bring up some a number of questions from you, and sorry. I want to let you know that Mr. Ko will be happy to address as many as he can in the time we have today. Anyway, we have shared a feedback link in the chat room, so I have you call provide us with your precious feedback about this webinar. So let's start with our first question and answer session. So let me check in the chat room. There are several questions here. First question is from Davin Angkawi Jaya. So his question is, seeing the COVID-19 pandemic, many companies suffered loss, so they had to make layoff in a large scale. Then the COVID-19 subsidies in the next few years, every company will certainly rebuild in order to survive and to gain profit. So in your opinion, what do you think of the career prospect for the accounting in the next few years?
Oh, okay. Accountants, basically, whether it's bad times or good times, I think there will still be a need for accounting personnel. Okay, because the company's scale of operations may be down, may be reduced drastically, then their operations may be much so-called curtailed, then they may not need maybe so many accountants, but I think it should not be a concern. I think companies will still need accountants to look at the financial affairs. Okay, so I think for as far as the accounting profession is concerned, okay, the future prospect is still there.
Okay. Okay, Mr. Ko, thank you. So the next question is from Giraldi JD Wahyudi. Seeing the effect of this pandemic, does this mean preparing emergency fund is essential for companies as well? And how many % of income should be spared for emergency fund?
Setting up of an emergency fund for such event, actually it's quite, like I said, it's quite difficult to to project, also to decide how much is sufficient. But I think it's basically at the end of the day, even though without a special emergency fund set up, okay, if your reserves, the company reserve is sufficient, you should be able to so-called survive the pandemic, the outbreak well. Because at the end of the day, any emergency funds is effectively taking so-called the resources from your retained profits, retained earnings. If you have a very healthy retained earnings balance, you should be able to weather this COVID-19 storm well. Because retained earnings, you either use it to declare dividends, or you either use it or capitalize it to convert it into share capital. So if you need, you may need to so-called convert it into additional capital for the company to have the resources to fight this COVID-19 pandemic. Okay, so I look at it, it may not be really that critical or that necessary to really set up a separate emergency fund for this purpose. Because at the end of the day, every company is free to use the retained earnings.
Oh, okay.
Yeah.
Okay. Okay, so is there any other question, colleagues, friends? So from the chat room, I just can see these two questions. So we are still waiting for another questions coming up. So, Mr. Koh, you mentioned before about the losses of the companies. So it can be benefit for the company because of the tax losses.
Yes.
But just we can recognize it just with the estimation of future profit, right?
Yes.
So so what can we do with the remaining loss?
Let's say if you assuming, let's say you have 10 million losses carried forward, available for use of future. Let's say, but if your projections tells you that you only have, let's say, 5 million profits, okay, to be able to utilize the 10 million losses, then that means the 10 million losses, you cannot recognize the full 10 million losses as a deferred tax asset. You can only recognize the deferred tax asset up to only 5 million.
Yeah.
So in that way, it doesn't affect your current profit or loss. Yeah. It's just that if you affect your future profitability, okay, but it all depends on what is your assessment of your future profits available.
Okay.
Of course, there will be a lot of uncertainty. Eventually, let's say if today you assess that you can only utilize half of the tax losses, but come next year, you can reassess the situation again. If by then, maybe you say that, okay, you can utilize maybe 70% of the losses, then you can recognize the additional 20%. So the benefit is not lost.
Okay.
Okay.
Okay. Clear. Thank you. So I can see that someone already turned on the camera. So I guess someone would like to ask in person to Mr. Koh?
Yeah, sure.
Eduardus? No? You can raise your question in Bahasa. So I will be happy to translate it for you. So don't be shy.
Most of the participants accounting student?
Yeah, mostly.
Okay.
Yeah, but not all of them are students. Also, they are friends and some colleagues.
Okay.
Okay, so there is no other question. Okay, so Mr. Koh, is there anything that you want to explain more, or you would like to explain already covered up?
I think basically what I need to cover will be, I think all those that I've already presented. Okay, unless any one of you don't quite understand, then you can always seek clarification from me.
Okay.
I'll be happy to explain further.
Okay, so there are two questions coming up. So one question is from Fabiola Manurung. So her question is, seeing the COVID-19, how does the social insurance system and the tax burden of economic activity affect entrepreneurship and innovation?
Sorry again, what is the question again?
Okay, I'll repeat it. Seeing the COVID-19, how does the social insurance system and the tax burden of economic activity affect entrepreneurship and innovation?
I look at it, it will still affect in a way, because I think resources will be so-called limited because of the focus on maybe different things now. Like I said, maybe they are more concerned with looking at effective prevention methods or looking for a cure, as soon as possible. As long as there's no cure, everybody is going to be worried. Okay, the life is not going to be normal. Economic activities cannot go back 100% normal.
Yeah.
Okay, so I think, but of course, innovative ideas can still be developed. There's still room for that.
Okay. Thank you, Mr. Ko. And there is another question from Bernardine Randi. Seeing this condition right now, what is the long-term impact of COVID-19 for the company in the world? And in your opinion, what is the best recovery strategy for the company who got the great impact from COVID-19?
Best strategy. I think if you look at how companies are so-called reacting to this outbreak, I think one thing that is important that we find is that companies must be very adaptable. Their model of business, they have to change it fast to cater to the needs, to the situation. Like just like this COVID-19, where there are lockdowns, people movement are restricted. There are so-called social or physical distancing to be observed when we go out or when we want to dine in the restaurant. You see, so a lot of people may be worried about going out and then maybe eating in a restaurant. So a lot of restaurants are so-called moving towards so-called delivery. You order online and they deliver, or you either pick up from them. Companies has to be fast to change, to react to this so-called restriction, problems with so-called their business model, how they deliver their so-called supply chain, things like that. They have to be able, so-called agile to change fast. Because those who can change fast, I think they are so-called more ready to to reduce the impact of the COVID-19. Otherwise, you are just like sitting there waiting to be so-called beaten by the COVID-19.
Yeah, totally agree. Okay, and then the next question. So there is a question from the YouTube. In this pandemic situation, most today company will be on economic recession. Is this going to be an opportunity to start up company who had a product compatible with this situation?
If you say product compatible with the situation, that means sort of something useful to counter the current situation. If it is, then yes, then it should be a good time to start.
Yeah.
Otherwise, if it is something not that so-called demanded by the market, then it will be a difficult time to start. Because as it is now, demands for everything is more or less down. Of course, except for maybe medical or let's say those supplement or gloves or mask manufacturers, they are there. So if you are starting some business that can help to so-called prepare for the current situation, then it should be a good time to start.
Agree. Totally agree. Okay, and then the next question is from Adrian Crisedi. What strategies can be done to carry out economic recovery in the short and long term, especially in industries that are badly affected by the existence of COVID-19, which must force them not to produce? And how can new graduates enter and compete amidst uncertain condition?
Best strategy.
Yeah. What strategy can be done to carry out economy recovery in short and long term, especially in industries that are badly affected by existence of COVID-19?
You see, if you say the strategy, even if by the entity or business or entity themselves, I think there's quite limited options rather other than relying on their own so-called resources to so-called to survive through this difficult time. But then if the government can come in and help, then there may be a lot of measures that the government can do to basically to lighten the burden, okay, to reduce the cost of doing business for these industries, and also to help them to recover in terms of, let's say, reducing interest costs, borrowing costs, and then maybe offering options for them to, let's say, recover in time. But other than that, I think by themselves, business entities, okay, where their business operations are very badly affected, I think the only resource that they can is that they fall back on their own so-called resources, financial resources, to help them to so-called survive this event, so-called this challenging time. Because once this is over, then they can recover slowly. Because if they don't have the financial resources, then they will not be able to so-called last, and they will not be able to so-called recover. By the time when the pandemic is over, they may already be so-called, they have lost the battle. They may have already wound up. So there are no way for them to recover.
Okay, thank you. And then the next question is from Rosalind Weni. Which sector of economy are likely to recover the fastest one? And which one the slowest one also?
Slowest, I would think, as it is now, looking at it, maybe tourism may be the slowest, because as it is, a lot of people are still very worried about traveling. I think a lot of people are not traveling overseas. Maybe locally maybe still possible. Maybe they can just travel alone themselves rather than go fly in the same airplane with many other people who you do not know whether how many of them are infected.
Yeah.
So I think that would be, I think the next one will be FMB. FMB is also quite badly affected because of this so-called social distancing, the restriction in the number of people who can so-called gather together, dine in the restaurant. So all this affected the so-called the business substantially. But of course, if the restaurant were to change the model a little bit, they switch some of the so-called their sales to online sales, to take away, then fine, they can still compensate for that. Then they may not be so badly hit. Okay. Of course, when you look at those who recover fastest, quite a difficult question to answer. Of course, as it is now, the least affected, we look at it. I mean, of course, those in the manufacturing of the masks, medical supplies, things like that, these are the least affected. I mean, they do not need any recovery. So recover fastest.
Yeah, maybe because it's also depend on the financial strength of that companies as well, no?
I would think maybe if you want to say recover fastest, I suppose maybe the banks will recover fastest, because all companies, when they start to recover, then the resources, then the borrowings, everything will affect the banks. So the bank should be the so-called the beneficiaries from such recoveries. So on a so-called consolidated basis, bank may be able to recover faster.
Yeah. Okay. Thank you, Mr. Ko. And then the next question is from Natasha Christian. during COVID-19, most people has done and made a lot of kind online shopping apps. In your opinion, is this kind of sector of economy is profitable enough during the pandemic? Online shop.
Online shopping, online business. I think at the end of the day, it depends on the product or the service that you provide.
Agreed.
If it is in demand, then of course it should be profitable and it should be able to so-called expand. I think once, even after the pandemic is over, such so-called business models will definitely be here to stay. And I think once people are used to such online shopping during this period, even once the pandemic is over, they will be so-called comfortable with such so-called online shopping, then they may still stick to it, even in normal times.
Yeah, okay. And then the next question from Anthony Devonico. What is the best solution in Indonesia or Malaysia in this time to survive from recession with many options from your presentation?
To survive the so-called recession.
Yeah.
It's quite a difficult question to answer. Survive the recession. Everything depends on whether the businesses recovers in time. Okay, if we have a lot of cases where people are made redundant, so ended up they may have to get involved in so-called self-employment, do their own business, start their own little business as well, but they may not be able to so-called do well. It may be just an option to so-called bring food back to the table at the loss with the loss of so-called income from employment. To survive, because you can't start any new business under this difficult situation. You start anything new, you may not be able to start, or you may not be able to so-called start well as well. So it is difficult because this pandemic is actually worldwide. It's not just localized in certain region. So you cannot say, okay, you leave out this region, you go to another region that is still very so-called good, getting good business economic activities, but now it's more or less a whole world, is facing the same problem.
Yeah, right.
It's going to be quite challenging here.
We can't expect of getting help from other countries because every country is facing the same situation and the same issues.
So it can be to varying degrees they are affected. But of course, now we read in the papers, maybe the only thing they can hear is it seems China seems to be recovering well, whereas the rest are still battling to recover.
Yeah, totally. Okay, and the next question. What about the accountability of the financial statements in the current pandemic conditions? Do you think the accountability can still be maintained?
Accountability, that means I suppose you're referring to maybe the reliability of the financial statement, the information contained or presented in the financial statement. That's why I think in this case, actually the existing financial reporting requirements, okay, as prescribed or as governed by the financial reporting standards, as it is now, is still sufficient, is still applicable in this current pandemic situation. Okay, there's nothing to do with the shortfall in the reporting standards. It's just that how you report, how you apply those accounting standards to this different difficult, challenging time. So I don't think there's going to be an issue of so-called the integrity or the accountability of the financial statement prepared during this period. It's a matter of whether you can apply them correctly, okay, and then to reflect your financial position and financial performance in a so-called realistic and so-called truthful manner.
Okay.
So that will come to depend on maybe the auditors again. So auditors will have a role to play to ensure that all those financial reporting standards that have been applied relevant to all business entity are being applied in a so-called proper manner.
Okay, and all standards are complied by all companies?
Yes, yes.
Okay, that's great. Okay, so I think that's the last questions that we got. Is there any other question, friends, colleagues, and students? Okay, there is another question, but I think the question is similar to the previous ones about what is the good idea for a new entrepreneur to open a business. I think we got the question, the similar question.
Yeah,
Or
this
would you
one,
like to
the
add
good one will
more?
be something that capitalize on the current situation that can so-called that they will have a big demand during this time.
Okay, yeah, right. Okay, so I think those are all the questions. Kristanto, you turn on the camera. Do you want to give some questions to Mr. Ko? Kristanto?
His mic is muted. Eh?
Yeah, your mic is muted.
Oh, no, sorry.
Okay, so do you want to give your question?
No, everything is clear.
Okay, so I think there is no other questions. So, because we don't have any other questions, so the question and answer session is over. So if you have any further, sorry. Okay, so, wait, oh. So the question and answer session is over. So I believe that maybe you still have some question in mind. Unfortunately, the time doesn't allow us to have a longer session. So on behalf of Faculty Economic and Business, Atma Jaya Catholic University, I'd like to extend my gratitude to Tunku Abdul Rahman University College, Malaysia, Dr. Chin, and Mr. Ko for this collaboration and your precious time and inspiring presentation. Hope there are more upcoming collaboration between Tunku Abdul Rahman University College, Malaysia, and Atma Jaya Catholic University, Indonesia. To our colleagues, friends, and students, we have shared a feedback link in the chat room. So I hope you will provide us with your precious feedback about this webinar, and also your idea about future collaboration and webinar for us to have. We will send the e-certificate by email, so please make sure that the email that you have provided for us is the active email. Lastly, thank you for attending this webinar and have a lovely weekend. Bye.
Right. Thank you, everybody.
Thank you.
Sorry for interrupted. Maybe before we close this Zoom, maybe we will have a photo session first.
Oh, okay. Yeah, I forgot to. We'd like to have the photo session. So please turn on the camera, everyone. Okay, Bu Nilu.
Maybe for the committee, please inform, give the clue if you have already taken the photo, please. Okay,
Is it done yet?
Celine?
Masih di slide 2 ya.
Okay, siap.
Next slide. The fourth slide. Okay, done.
Okay.
Thank you, everyone.
Okay, thank you, Dr. Chin. Thank you, Mr. Ko.
Right, thank you.
Bye, everyone.
Thank you, Mr. Ko, for your
Thank you.
Yes,
time
thank
today. Thank
Yeah.
you, Dr. Chin. Thank you, Ibu Tia. Thank you, Bapak Petrus. Thank you, Ibu Linda. Terima kasih banyak sudah membantu acara hari ini. Thank you.
Pleasure. Thank you.
Thank you.
Have a great weekend, everyone. Bye.
Bye bye.
Bye.
Thank you.